Welcome to the B.F. Anderson Technical Report for May 26. Investing is a game of outliers. In other words, you want to look for those really rare opportunities that really they become apparent during very difficult markets such as we're having now. So here's a graph of Cisco Systems, which was an outlier back in the late 90s, 1997 through 2000 here. You can see the tremendous up move that Cisco Systems had, and the main thing that made them an outlier was they were basically inventing the internet. It was a very special company. Now, back to Jesse Livermore for a second. Rule number 17, it is much easier to watch a few than many. So when you're looking for outliers and, think about finding Walmart, let's say back in 1972, if you also were finding things like, Kmart or Sears or JCPenney, you can see where, just watching Walmart really kind of made more sense. So when you do something called focus investing, which is where you focus on just a few really good companies, you have the opportunity to make some decent returns. However, this is an expression called picking up pennies in front of a steamroller. Conveys the idea of chasing small gains in spite of disproportionately large risks. So in other words, there's a lot of strategies out there where you broadly diversify and you think you're reducing risk by doing that, and in reality you're really increasing risk because, like I said with the Walmart example, you're spreading out into other companies that are just not as good as Walmart, and therefore it ends up like you're just picking up pennies in front of a steamroller because you're taking on all the risk of the market but not really going for the returns. Examples of this would be kind of energy stocks. They're really not very profitable businesses, but also things like, consumer staples, which has very low profit margins. But here's a graph here of the consumer staples group that you can see here. The group took quite a dump here. So, you would think about it, you'd say, well, I'm safe in the consumer staples, but then, the bear market comes and get them just as well. Now, an example of another situation, here's Target. Excuse my graph here. Target announced earnings, big disappointment. So you would say, this is a really safe investment and so forth. But look, it's probably not going to be coming back for a while. And here's Walmart. Walmart had a announced earnings as well, and just a waterfall decline basically. So also I wanted to kind of mention the idea of buy and hold. It's a great idea on paper and it sounds really nice, but how would you have done this? How would you have handled this? Because we had to handle this. This is 1999 to 2000. This is Amazon.com. Amazon got up to, here, let me get this on here. Amazon got up to over $100 a share after being, going public back in 97, and then dropped all the way down, actually as low as $8 a share. So, you would go, okay, well, I'm going to buy and hold Amazon, but how would you have gone through that kind of a decline and basically survive? The name of the game is to make money in the bull markets and then protect your money in the bear markets. Bull-bear ratio, we're continuing to see, record levels of sentiment readings that are very positive. A lot of pessimism out there. Here is the NASDAQ. You can see continues in a downtrend. However, this is the 10-day moving average. Kind of looking like things are kind of starting to kind of round out a little bit. Could be in the process of forming a bottom here. Now, on the monthly graph, you can still see we're below the 10-month moving average, which, we need to get back above that moving average. Here's the weekly, which is below the 35-week moving average. Then when we go to the S&P, you can see also the same downtrend, but also starting to see this kind of a little bit of a rounding here. We could be seeing an improvement here. Here's the monthly, again, below the 10-month moving average. Here's the weekly. We continue to be below the 35-week moving average. So, we're still basically in a downtrend, and what we've got to decide on is, are we getting, rallies within the downtrend? Now here's the aggression index. You can see very clearly that we're in the consumer staples are outperforming technology or NASDAQ. We came down, made a low, got a small rally, but we're pulling right back again. Continue to stay below the meaningful moving averages. Here's the three economic indicators. Here's interest rates. Again, we got up over 3%, and then we're backing off here. Don't know if that's a good sign or a bad sign, but it could be a bad sign because loan demand could be really drying up, and that's just causing interest rates to go down. Here's price of oil continues to pretty much move sideways, and the financial stocks continue to stay in a downtrend. Got a little bit of a pop, but still in a downtrend. Here is the number of new lows. Again, we got a real big elevation, but this is what we call a where you've got an exception here, where the number of new lows are starting to dry up relative to where they've been as the market has made new lows. So it's kind of like, okay, maybe the sellers are drying up here. Now on the trend strength on the NASDAQ, we're still at 0. You can see that, you can see a little bit more clearly here that the index continues to stay in a downtrend. These moving averages need to straighten out. Here's the trend strength on the S&P 500, same problem. Then we get into the VIX, continues to stay elevated up around the 30 level. The VIX is saying that volatility is really pretty high right now. We really would see a capitulation low if this reading were to get up around 40. On the top 10 or the top 5, you can see energy continues to dominate. Occidental really does have a very nice looking graph here, holding that 10-day moving average, continues to look somewhat constructive. Just a kind of a tip, look at where the top of the base is. You really want to draw a line across the top of that base and really try not to chase the stock. With these energy stocks, they've really run up quite a bit. Now here's next tier oil field solutions. So, this is a service company, somewhat consolidating. Here is Antero Resources, has broken out, given a pretty powerful buy signal here. As you can see, if you draw across that base, it has broken out. So the energy stocks continue to dominate. Here's Comstock Resources, same thing. Here is EQT, which is the nation's largest natural gas producer. Anyway, kind of forming a cup here and breaking out. So energy continues to stay strong, but then again, is it pennies in front of a steamroller? I don't know. We'll have to see. But if you have any questions, please let me know. Thank you very much.